What's going on, guys? We're going to dive right back into this Robinhood portfolio video. Right now, the portfolio is down $88, and in the after hours, I'm only up 17 cents. So, guys, if you're ready to know about what's been going on in the markets, there's been a lot of talk about trade tensions flaring back up. The trading war is back on. Trump has announced tariffs for as much as I'm hearing 25 to 50%. So a lot of investors are freaking out. A lot of traders are they're beginning to trim their positions. They're getting out. A lot of people are just losing their minds. But we're gonna go on ahead and see for the week. I am down $290 for the past past 3 months. Let's just go in and get there. I'm up $589, so I'm still up 2%, which is really well. But we can definitely see the volatility right here in this section when tourists were announced. So, and for the past month, I'm down $272. So, the markets have been fluctuating a lot as of late. Volatility's back, and if you guys have looked at the S&P 500, we sort of have hit a double top. So the markets were at all-time highs, and I think it was closer to the beginning of October. The market crashed a little bit. It had a correction, a massive sell-off in December, and then the markets have been going up for all of 2019 until the tariff announcement. So the tariffs have really caught investors off guard, and a lot of people are beginning to trim their positions. But let's go on ahead and talk about what the portfolio has been doing, at least for my portfolio. Apple 203. We can see Apple is definitely starting to trend back. I think this is contributed to a lot of Apple sales. Has been, thanks to China, they have been very good. But now that there's tariffs, China's going to be having those tariffs from 25 to 50%. A lot of people are getting out of Apple, so this can contribute to the amount of selling in Apple, down 3% for the week. So Apple is definitely trending back here, but my average price is still pretty good. Average cost $172. I would like to buy more Apple. I'm not going to buy it right now because it's still pretty pricey, but total return still up 18%. $93. Portfolio diversity quite low, but I'm definitely looking forward to adding more shares of Apple. I'm probably going to go all in if it gets below that average cost. I'm looking towards around $165, but I don't even know if it's going to dip that low. So let's take a look at Costco right quick. Costco actually had a very good day. So this is what I was talking about these stocks that have very good days when the markets are down. Costco really has a really good after hours, up 1% in the after hours, and today it is up 0.48%. So they have not been doing very well. Actually, for the past week, they're up $1.91. So Costco has a lot of utility here. We could see that, and the markets have been going down a lot, but my average cost is still pretty high. It's pretty overvalued. The average cost of $246 and shares 3. Total return -$6, but it's just $6. That's not too big a deal for me. 0.89% doesn't really matter. Today was a very good day for Costco. I like them. I like them a lot, and I'm going to probably buy more if I could just get some more funds back into the portfolio. I would love to buy some more of Apple. I would love to buy some more of Costco, and I would like to buy some more of Disney, which reported earnings today. We can see Disney had a pretty good day. It's a pretty good spike up. Let's take a look at the average price. Still $36.18. I did sort of trim my Disney position, but I'm going to quickly talk about why I did that. Today's return of $6. Definitely undervalued for what I believe right now is still to be a pretty good PE ratio for Disney for all the things that they're doing, the streaming services and the movies, and just a pretty good stock that I think analysts have a buy target of $175 for Disney. So, again, I've had Disney before. I did miss a spike up, but I still think at an average cost of like $135, or if you can get below that $140 mark, I think Disney's still a pretty good buy at these levels. But I trimmed my Disney position. I didn't really want to, but I had no choice because some money needed to go into the portfolio elsewhere. Excuse me, and that was Altria. So, I'll get to that stock, quite soon. But Disney is a fantastic company. It fits really well what the portfolio is trying to do, and it provides me with that streaming content. So, Johnson & Johnson, 139.79. Sort of kind of flat day for them, but I'm still up $5. An average cost of 139. Excuse me, I said close to saying a retail giant. Johnson & Johnson not a retail giant, it is a healthcare giant. Healthcare stock that's very, very well known. Dividend aristocrat or dividend king, whatever you want to call it. But dividend yield is, I think that's actually quite accurate. I think it's closer to like 2.8 or something like that. But Johnson & Johnson, a great stock to buy. You never sell just stock. I've sold Johnson & Johnson before, but I've made pretty good money from Johnson & Johnson. I think I made some $200 in the previous videos. But Johnson & Johnson, a very good company. Let's take a look at Pfizer, $40 right now. Pretty good day. The markets were going down, but I really love these defensive positions. Johnson & Johnson, Pfizer, Costco. Looks like they were having good days today. Portfolio itself is down, but it's not down too much. Total return $55. Average cost just below $40. I really wanted to buy this under $40 because of its defensive nature for the portfolio. It does have a pretty good yield. I think that actually is accurate, 3%. But Pfizer is again, pharmaceutical healthcare really works well with Johnson & Johnson, and gets the portfolio. It provides the portfolio more defensive measures. So long term company to hold. I definitely like these 50 shares at this position, and I'm going to get paid $18 with the dividend. So pretty good stock. Let's talk about Altria. Altria has not been having very good days here. Altria is down 1%, closer to 2%, $51.91. I've moved some money out of Disney and loaded up on more Altria, but my average cost is still $53.53. In total return, I'm down 2%, and I am minus $78. So all I really wanted to do with Altria is just get that 50 shares because of the dividend they pay out is really, really quite high and pretty friendly expense ratio to go along with that dividend. I think they pay an 80 cents dividend. So for the amount of shares that I have, which is 50, Altria will pay, I want to say $40 not every single month, every 3 months. Every 3 months, they would pay $40, which is really, really good. And a stock like Altria, that's I know the headwinds are pretty strong right now, and the market sell-offs are not helping. But I still think that they are working with the FDA to get more things approved. And even though despite the cigarette sales not being good, they are trying to concentrate on cannabis and vaping. So I just like the moves that they're doing right now. Let's take a look at AT&T, $30.34. AT&T is starting to trend back into that buy range that I really like. So I've definitely been going in a little bit on AT&T. So my average cost was $31 in the previous video. I think right now, its average cost is $30.95, and I think I had a strike price of about 100 shares of AT&T, so I would get paid $50 from AT&T, which is pretty good. Right now, the total return, I am down $41. So there's not a lot of capital appreciation with AT&T, but it's starting. My buy signal for AT&T is definitely around that $20 mark. Excuse me, not $20 mark. That $29 mark and the low $30 mark. And AT&T is starting to trend back here. So thanks to the trading war, I'm able to pick up some more shares of AT&T, and I'm going to see if I can get this to 100 shares and get that $50 dividend. Let's take a look at my ETS. Vanguard Dividend Appreciation ETF starting to trend back. I did buy into the all-time highs. Perhaps I've bought too many shares of Vanguard Dividend Appreciation ETF. I thought 10 shares was pretty good at an average cost of 113. But again, the market, when I bought it, the markets were at all-time highs. So I probably should have just stick to my little 3-share strategy. And when whenever I do buy a stock that's at its all-time highs, I just buy like 3 shares. I don't really go all into it. But I've been thinking about moving some money out of Vanguard Dividend Appreciation ETF and loading up on more AT&T so I can get that stock to 100 shares, which is my strike price. But I don't think I'm going to do that. I'm not really sure. But Vanguard Dividend Appreciation ETF is getting hit really hard here because of its heavy exposure to industrials. So, but I think that the consumer staples. The consumer staples diversification that it has amongst the ETF is really helping the portfolio. Is helping the ETF not dip insanely. So the industrial exposure does not help. But again, Vanguard Dividend Appreciation ETF, a very very solid ETF. So. Let's take a look at Vanguard Total Stock Market ETF, starting to trend back as well. 147. I think this was at 150 in the previous video. Right now, 50 shares. I am still up on $1,266 for 20%. 20 percentage gain. Portfolio diversity 32%. That's starting to go down just a little bit more, but this ETF will pay around $35 to $38. Not each and every month, every 3 months. But VTI starting to trend back here thanks to the trade war. It's getting hit up. This ETF will just do whatever the market does. So if the market's selling off, this ETF is going to take it to the chin. But I'm continuing to hold. Nothing was sold, and you guys see that. So. And the next ETF in the portfolio is I think this is the last ETF in the portfolio, the last stock in the portfolio, SPHD, PowerShares S&P High Dividend ETF. This ETF pays monthly. Again, as I've mentioned before in the other videos, $41.80. Starting to trend back here. So again, this is another ETF that sort of just does what the market's doing. And if there's a sell-off, then this ETF is going to sell off as well. High exposure in real estate and utilities, but let's take a look at what I've been doing with the stock shares. 100, nothing was sold. Average cost $38. I'm definitely looking forward to buying more SPHD if it ever gets back down to 38, and it's starting to trend back. So I need to get ready to buy some more shares. Total return, some really nice capital appreciation, $321. I know that's starting to trend back. One time I was up $432. So. It does pay monthly. Again, guys, I thought about doing covered calls with SPHD, but it's not very liquid, so I'm not going to do that. Dividend, $14 every single month currently. That could fluctuate. It could be $13. It could be $15. It just depends on what they report. So. And that is going to do it for the portfolio, guys. It's still a solid portfolio. I know the portfolio has just been jumping all over the place thanks to the trading tensions, thanks to the trading war. But right now, the portfolio is at $22,520, and I would like to get this portfolio to $25,000 because then I will unlock unlimited day trading. And I'll probably start doing some covered calls. If I can get T to about 100 shares, I'll probably do some covered calls. I wanted to have probably like 500 shares of T, but that's a lot of money to be sneaking into T. And if I can just get this to 100 shares, and I really want to compound that dividend to like $50 every 3 months. That's a lot. And then you have Altria paying dividends. PFE is paying dividends, and then you got the high dividend ETFs just kicking in, and everything's just kicking in. And that's the reason why I'm not even worried about this sell off, because I know I'm gonna get that money back through dividends. So yeah, guys, $22,520, not a good day. The portfolio is down $88. But again, guys, invest wisely, and I think once the trade war is priced in, then we'll start seeing stocks going back up. But I'm going to cut the video here, guys, and I'll see you guys next time.